What's up, everybody? This is going to be a quick video because it doesn't need to be long. The Meet Kevin ETF is absolutely terrible. Kevin does not have the track record or the process. You can look it up in the summary prospectus of his ETF. There is no real process. It's basically a market timing ETF. Kevin does not have the track record, the history, and I would not trust him with everything he has going on to actually be focused on this ETF. And the performance is far worse already than other growth-oriented ETFs that actually do have a track record and do have a past history of success and a process for actually finding good investments over the long term, unlike Kevin's ETF. So I don't make a habit of telling people what I think they should or should not invest in. I am 100% comfortable telling people not to invest in the Meet Kevin ETF if you care to be invested in something that actually has a sensible process and a process that is likely to lead to decent or even good investing returns. I do not think that will happen with Kevin's ETF, and I will put money to a charity over the next 5 years if Kevin's ETF beats any of these other ETFs that I'm going to compare it against right here. If it does, if Kevin wants to take me up on this or not, whatever, I'll just make my own donation to a charity. If it does beat any of these, because I'm almost positive it won't. But anyways, that's how confident I am in this. I would never put my money in it. I would never tell any of my friends or family to put money in it. All right, so I did a previous video about red flags. So go through all those red flags where I outline Kevin's distractions, how he's doing so many different things and not focused on actually managing a fund, how there is no actual process identified, and it's basically just a market timing ETF. So I already went through all that stuff. Now we're just comparing it to these other ETFs, and I'm gonna show you another red flag that's popped up, how he's already made major changes to the allocation in the portfolio over the last 15 days, basically. So if that's happening now, this is really just a market guessing and market timing ETF, not one with a sensible process, right? Great ETFs buy and hold things at a minimum for quarters, but usually you'll see them hold positions for years, maybe even more. All right, anyways, I would buy any of these over Kevin's terrible ETF any day of the week ever. SCHG, VUG, QQQ, those are three great options if you want tech exposure and tech growth. And even SCHD, the Schwab Strategic Dividend ETF, this is the one that I think over the next 5 to 10 years will probably perform the worst. I think that over 5 or 10 years, these three tech-oriented ETFs will probably outperform SCHD just because of how much valuations have come down and how tech tends to outperform over the long term. Over the short term, I have no idea what's going to happen. Over 5 or 10 years, I would guess that these three beat SCHD, but that they all beat the S&P 500 and they all provide good shareholder returns. That would be my guess. Kevin's ETF, unless he gets lucky, which luck is not a way to invest, by all sensible investing processes and probabilities, Kevin's ETF is a piece of trash and will underperform the rest of these. The first major problem, the expense ratio, 0.77%. It is, 10 times or more expensive than these other ones, other than QQQ. So you see SCHD 0.04%, VUG 0.04%, QQQ is 0.2, so this is still 3 times more expensive than QQQ, and then SCHD is 0.06%. Again, you can see how tiny this little fund is. Generally, you never want to invest in a fund that is that small, that illiquid, just because why would you? All right, with these other ones, you get a dividend, which you don't with Kevin's. Okay, got it. But here, already over the last month, and it's basically been out a month, this is supposed to be, and here's the thing, this is why I'm confident that this is just a terrible ETF. Kevin has a portion of this ETF that he's supposed to use to hedge against risks in the market and stuff like that. He outlines it here in the prospectus, targeted ETF selection for macro hedging 0 to 30%, and then 70 to 100% innovative companies with pricing power selection, right? I outlined in my last video, this is my last video, and you can see the top 10 holdings and the percent allocations. Might be hard for you to read in this video, so I'll just read them to you. Tesla, 23%, Apple, 13%, US Treasury 2-year notes, 7.7%, Taiwan Semi 7, Trade Desk 5, Invesco dollar bearish 4.87, and then Enphase Energy 4.44. Okay, let's jump over to now. This is most recent. You've got Tesla at 24, so that's about the same. The US Treasury 2-year note ETF has doubled. He's doubled the size of this, right? And then I don't see that bearish dollar position, so maybe he took that and added it to the US Treasury 2-year note. And then I also don't see end phase. So we have 2 of the top 10 holdings either not in the portfolio anymore or much smaller in size. And so my question is just how much trading in and out and timing the market are you going to do? And why is so much happening already? It clearly tells me the research isn't there. There's no process there. This is literally just, timing and day trading the market basically, which is what Kevin does on his channel essentially. And you can see here 88% right now in the top 10 and 19 holdings. In his previous video, which was less than a month ago, is 12 days ago. 21 holdings and 78% in the top 10. So you're telling me over a 12-day period, your conviction has changed that much, right? But also, so he's got this hedge or this portion of the portfolio that can be hedged, right? And when you do that, you lose out on the upside, right? Well, even with that hedge and with those treasury notes and that bearish dollar position, he's still down 15% over the last month, where SCHG is only down 8%, VUG is down 8.5, QQQ is down 9.2, and SCHD is down 4.29%. Okay, and look at how these have performed over the last 10 years. You have 10 years of history. This is just price performance, so they're even better if you look at total returns because total returns includes dividends. But over the last 10 years, even with how bad these have done year to date, SCHD 231%, VUG up 205%, QQQ up 319 and SCHD up 170. But again, if you add the dividends in, these are actually even better. And so anyways, this fund is not reliable. Kevin is not reliable as a fund manager. He has no track record, and you don't bet your money. You don't put real money into something that has no clearly identified process. Again, if you look at his ETF, there is nothing that talks about any quantifiable means or ways or processes of picking stocks in here, or how position sizes are limited, or how things are allocated. None of that. It's all just fluff about investing in innovative companies. It's all to get people that don't really understand about investing to just buy into his ETF because you see how popular his YouTube channel is and how he's pumping things on social media, okay? This is not how a proper ETF is managed. Go look at do your own work here. Go look at the prospectus of SCHD or QQQ or SCHG or VUG. Go look at the prospectus of another real ETF and you'll see what they really look like. That's where you want to put your money. Doesn't mean that those are going to go up or down or anything like that. It's just investing is about probabilities. Investing is about experience. Investing is about process. And if you don't have any of those 3 things going for you, stay away. Anyways, I promise I'm not trying to pick on Kevin here. He's built a great business for himself. He is a hard worker, a great content creator, all of that stuff. But there's a difference between a good business person, a good content creator, somebody that has a lot of money, and somebody that I would trust managing my own money or managing a fund that my money is in or that my family's money is in, okay? Kevin is not that person, and I would not recommend anybody that I care about to put their money with somebody like Kevin and as inexperienced and as unreliable as he is.